Welcome everyone to a new episode of Finance in Focus. We're the podcast team from the Saudi Student Finance Society, and we're very excited to bring you in-depth insights on the latest economic and market developments. I'm Maria Tuteran, and joining me today are our amazing team members.
Good morning, I'm Noor, and I will be covering the most recent global and macroeconomic perspectives. I'll also focus on how commodity prices are sort of influenced by inflation and supply chain disruptions as well.
Hello, my name is Gasper, and I'll walk you through market performance, summarizing the key movements in global indices. I will also dive into equity research, analyzing a top-performing company, discussing its recent performance, financial results, and future outlook.
Well, today's episode will be a little different from our previous ones. Instead of diving into Insight Spotlight, we'll be just focusing on the latest impactful macroeconomic news and how it's shaping the stock markets. Again, as always, we've got a packed agenda, so let's dive right in. So now, to kick things off, let's first invite our expert in macroeconomic events, Noor, to the table.
Hello, Maria.
Hi, how are you doing?
I'm good.
So, Noor, there's been quite a bit of news circulating this week about the IV industry, particularly with all of ongoing debate surrounding Tesla. Do you have any comments to share?
I mean, yeah, of course, in our current economic situation as well, we evidently see Tesla a lot in the news. Now, Tesla has reported its weakest quarterly performance in 2022, with deliveries dropping sharply as the company is losing its position as the world's top electric vehicle manufacturer to China's BYD. Now, the company faced consumer pushback in Europe, evidently, intense competition in China, and a shutdown in demand, even in its home market, evidently linked to certain political views.
Yeah, and what's about the political situation surrounding Elon Musk? Does have an effect on Tesla's performance?
I mean, realistically, of course it does, because at the end of the day, we are what we see on the news. Now, Elon Musk's alignment with US President Donald Trump and his controversial opinions and leadership to the so-called Doge have sparked backlash within the United States and obviously worldwide as well. Critics, including investors and analysts, have voiced their concerns over Musk's absence from Tesla, as he appears to prioritize his political activism in Washington over accompanying leadership. Now, according to the auto data, Tesla's US deliveries fell 11% year on year in the first quarter.
No, that's actually very crazy. But let's shift focus away from the US for a second and take a closer look at, for example, the EU and specifically the defense sector. So with growing political tensions between the US, the EU, the tariffs and what's not, I'm just curious how the European countries are responding in terms of safeguarding their own security.
I mean, that's a really good question to ask, especially now as we see what's going on in the news. So the UK has proposed the creation of a supranational institution that would allow European countries to jointly procure kind of military equipment, build up weapons and stockpiles, and finance large-scale rearmament across the continent in general. Now, a non-public document drafted by British officials and obtained by the Financial Times advocates for a multilateral fund formed by Coalition of the Willing. Now, this fund would essentially raise capital on financial markets at preferential rates, supported by sovereign guarantees and equity backing. It would provide loans for defense-related projects and facilitate the acquisition of military assets to create a sort of shared stockpile among participating nations, so it's a common pile.
Oh, that's actually quite interesting. But what about the EU tariffs? Do we have a development on that front?
I mean, it's all we see in the news at this point, to be honest. So, of course, we have developments. We have developments every week, but especially this week, the European Commission President Ursula von der Leyen has announced that the EU is fully prepared to retaliate against the new US tariffs imposed on Wednesday. Now, speaking to the European Parliament, she sort of stated that Brussels is ready to target the US services exports, particularly those from major tech firms, if President Donald Trump proceeds with imposing broad reciprocal tariffs on imports. Von der Leyen also emphasized that the EU will negotiate from a position of strength, citing the bloc's leverage in trade, technology, and market size as well.
No, definitely, that is quite interesting and crazy in general. And is there any other strategies that the EU could use to respond to the US imposing tariffs?
I mean, it's a bit hard to kind of think about right now, but possibly. So the EU is considering all available tools that they have, including suspending certain intellectual property rights and barring companies from sort of public procurement as well, contracts under its enforcement rules. Now, in a further escalation, the EU may invoke anti-coercion instrument for the first time, which would allow for even stricter measures. This could limit the US financial firms' access to the European market in general, and any such action would require the backing of weighted majority of EU member states, essentially.
No, that's interesting. And okay, but like with all this political tension, instability, I would think that this moment are somewhat reflected in the commodity market and especially as well currency prices. So, do you have any news in that regard?
I mean, absolutely. I mean, the market is ever evolving and it's circular at the end of the day. Now, the British pound to the USD exchange rate increased by approximately 0.63% over the past week, indicating that the British pound has strengthened. The euro to USD exchange rate increased by approximately 0.63% as well over the past week, indicating that the euro has also strengthened against the US. Now, the US dollar to the Chinese yuan exchange rate increased by approximately 0.23% over the past week, indicating that the US dollar has strengthened against the Chinese yuan, obviously due to the governmental implementations of the influx of money.
Yeah, yeah. And how the commodities holding up right now? What are the current price levels? What is the sentiment within the market?
I mean, the commodities are kind of stabilizing a little bit, but the current spot rates for gold, platinum, and silver as of April 2nd are approximately 3,126 per troy ounce of gold. For platinum, approximately $970, and for silver, approximately 33.78 per troy ounce.
No, that's actually very fascinating news, and it's quite interesting to see the breakdown and what's not. So, from Tesla's facing delivery drops, partially due to Musk's political involvement in the government, and while the EU is gearing up to relate EM's the US tariffs, I feel like we're living in this world, which is quite interesting, especially with commodity prices reflecting these rising tensions globally. So, thanks for that very insightful intake, Noor. It was very lovely for you being here.
Thank you so much.
And now let's turn over to Gasper, our expert in market trends and equity analysis, to dive into the latest market movements and share his top equity research finding. Hi Gasper, it's always great to have you here with us. So can you please provide us the latest market trends?
I would be pleased to guide you through this week's market movements. The past week has been marked by significant volatility across global indices, reflecting shifted investor sentiment. A notable focus has been CoreWeave Inc., a company that has garnered considerable attention following its recent initial public offering.
Wow, it seems like there's been a lot to unpack there. So shall we start by looking, for example, let's say at the US markets?
Of course, the S&P 500 experienced a decline of 0.8% this week, closing at 5,861 points. This downturn is primarily attributed to diminishing enthusiasm around AI technology and concerns about the US economy's future, including potential impacts from President Donald Trump's announced tariffs on imports from the EU, Canada, Mexico, and China. The Nasdaq Composite on its side saw a more pronounced decrease of 7% since last week, finishing at 20,550 points. High momentum AI stocks, notably Nvidia, weighted heavily on the index. Nvidia's shares tumbled 8.5% after its quarterly report failed to meet heightened investor expectations, leading to a broader sell-off in the tech sector. The Dow Jones Industrial Average demonstrated relative resilience, posting a modest decline of 1.54%, closing at $43,239. This performance was bolstered by strength in defensive sectors such as consumer staples and utilities, as investors sought stability amid market turbulence.
Now that we covered the US markets, so how about we turn our attention to more the European markets since we're located here? Any news on that point?
Definitely, European equities mirrored the cautious sentiment observed in the US. The Euro Stock 50 index declined by 0.6%, influenced by mixed economic data and ongoing geopolitical tensions. Germany's DAX experienced fluctuations, initially rising following favorable election results, but later losing momentum due to broader economic concerns. Despite these challenges, European markets are in a better position than before, reflecting a cautiously optimistic outlook among investors.
Wow, that's interesting to see the difference between the US markets and the European. And but I mean, now that we covered both of them, so how about we shift the things towards, for example, let's say Asian markets.
Asian markets presented a mixed picture. Hong Kong's Hang Seng Index led with a year-to-date gain of 18.95%, driven by robust performance in the technology sector and positive sentiment following supportive government policies. Conversely, other regional markets faced pressure from global supply chain issues and concerns over economic growth trajectories.
That's actually interesting. And it's quite interesting, to be honest, to hear about the recent stock movements, especially how markets across different geopolitical regions are seeing varying results. So speaking of the markets, do you have any standout performances this week? Any particular company that brought you interest?
Definitely. This week, our spotlight turns to CoreWeave Inc., the newest entrant to public markets, shaking up the AI infrastructure landscape. After launching its IPO on March 28th at $40 per share, the company saw its stock rally over 50%, closing at $57 within 2 days. The momentum reflects investors' growing appetite for firms at the heart of AI compute infrastructure, CoreWeave's specialty.
I mean, Gasper, like we're always talking about the artificial intelligence and the technology companies, but what is this that makes CoreWeave to stand out to investors?
CoreWeave isn't your average cloud company. Founded in 2017, it delivers GPU-accelerated infrastructure, purpose-built for high-intensity AI workloads, as we see at the moment. In 2024, the company's revenues exploded by 737% to $1.9 billion, but this hyper growth came at a cost. Net losses deepened to $863 million, driven largely by infrastructure investments and client scaling. What's driving investor confidence is not just revenue, but its ecosystem. NVIDIA, a key supplier, took an equity stake, signaling strategic alignment in the race of AI dominance. Yet the company faces concentration risk, with 62% of its revenue linked to Microsoft, underscoring the importance of client diversification going forward.
That's interesting. And but what about the technical perspective? So, are there any signs that investors should be watching or should be looking out for?
Of course, each week we present you with a more technical analysis of the company presented. From a technical angle, CoreWeave's price has settled into a volatile but bullish channel. The $40 IPO price now serves as a strong psychological support, while resistance has formed near recent highs at $57. If buying volume holds up, we could see an attempt to break into higher territory through any fade below support could trigger consolidation. Still, analysts remain largely constructive. CoreWeave recently received a Platinum AI infrastructure rating from SemiAnalysis, ranking above AWS, Azure, and Google Cloud, underscoring its positioning in a high-demand vertical.
Oh wow, I really love the company then. It sounds fantastic. And I mean, alright Gasper, after we're looking at the CoreWeave's unique position and the financials and the technical startup, so what would be your main final takeaway here?
All told, CoreWeave is shaping up as a potentially pivotal player in AI cloud computing, albeit one with early-stage financial challenges and a volatile stock profile. It's a classic growth versus risk story, an early-stage AI bet that the market is watching very closely, definitely.
Okay, well, that sounds actually quite interesting. Thank you for the company, and we do think that investors would like it a lot. So thank you for the very great insights, and it was fascinating to explore both the broader markets in the US, China, and what's not, and the CoreWeave's growing role in the AI infrastructure. We've been exploring global market trends, but now how about we shift our attention to something closer to home, the Study Student Finance Society, and its effort to help students sharpen their finance and investment skills. With several exciting events taking place now, it's the perfect time to get involved. So first of all, on the March 18th, we hosted a virtual recruitment event with Sivan, a leading private equity firm with over $44 billion in assets under management. They focus on sectors such as, for example, healthcare, technology, and consumer good. And they were looking for 2 assigned interns for off-cycle internship in Madrid. Following with this rendezvous, on the March 31st, we welcome Fencia, a Barcelona-based company specializing in tech-driven analysis of real estate assets. They offer innovative solutions in the real estate market, and they will again recruit for internships within their growing teams. Additionally, on Thursday the 3rd, we hosted an engaging blockchain and crypto panel where we covered everything from the basics of how the blockchain works to current market trends. We have also explored the history and the future of blockchain, discussed government regulations, highlighted real-world uses across industries like, for example, finance and supply chains. And now let's look ahead. Looking ahead, we're excited to share that AmplifyMe is launching a multi-unit asset management competition on April 24th. An amazing opportunity for students to dive into real world of investment strategy. And mark your calendars, by the way, our Shark Tank conference is just 3 weeks away. We can't wait to bring together brilliant ideas, bold pitches, and top-tier finance mind for what's sure to gonna be an unforgettable event. So let's wrap up this week. First of all, we've explored the Ivy sector and industry and Europe's push for the defense independence, along with the brewing tariff tension between the US and the EU, and how all of this political uncertainty is ripping through commodity and currency markets. Secondly, we took a global tour of the markets, starting with a dip in the S&P's 500 and ending with a strong gains in Hong Kong. And finally, we spotlighted a CoreWeave, a rising force in AI cloud infrastructure. With explosive revenue growth and a bold investment strategy, it's positioning itself as a global key player in powering the finance and the future of the artificial intelligence, though not without risk tied to an early stage volatility. As always, staying ahead of this shift is a key to making informed decisions. Thanks for tuning in, and we'll see you next week with more insights and analysis.